Gold surges, dollar dips. Peter Schiff warns of impending U.S. economic reckoning. A broad summary. Peter Schiff's The Sell America Trade gathers momentum in this episode of the Peter Schiff Show. Renowned economist and outspoken critic Peter Schiff paints a stark picture of the current U.S. financial landscape, arguing passionately that the Sell America trade is not just a trend, but a gathering momentum, signaling significant economic distress ahead. His analysis weaves together market indicators, critiques of U.S. fiscal policy, and warnings about the future of the dollar. The core thesis, a looming U.S. economic crisis. Schiff's central argument is that the U.S. economy, fueled by unsustainable government spending, mounting debt, and misguided monetary policy, is on an accelerating path toward a severe currency and dollar crisis. He views recent market movements as clear evidence of this impending reckoning, urging investors to divest from U.S. dollar-denominated assets and seek refuge elsewhere. Market signals supporting the Sell America trade. Schiff meticulously details several market indicators to support his Sell America thesis. Stock market downturn. He labels recent periods as Sell America week due to continued declines in U.S. financial markets, suggesting a fundamental shift away from U.S. equities. Precious metals rally. In stark contrast, gold saw over a 5% gain, achieving its highest weekly close ever, with silver also rising significantly. Schiff consistently champions precious metals as the true safe haven, appreciating when fiat currencies, particularly the dollar, lose value. Platinum and palladium also saw gains, reinforcing the broad strength in commodities. Weakening a dollar. The U.S. dollar index plummeted by 2% to its lowest weekly close in over 3 years. Schiff contends this is not merely other currencies strengthening, but a fundamental weakening of the dollar itself, a direct consequence of U.S. economic policies. Soaring Treasury yields. Simultaneously, U.S. Treasury yields, including the crucial 10-year and 30-year bonds, rose sharply, with the 30-year closing above 5%. Schiff emphasizes that rising yields are usually a sign of distress, indicating that the market no longer views U.S. Treasuries as a safe haven but as a risk asset, demanding higher returns for the inherent inflation risk. He contrasts this with the 2011 S&P downgrade, where Treasuries rallied, highlighting the current, unique, and concerning market reaction. Critique of U.S. fiscal policy and political leadership. A significant portion of Schiff's commentary is dedicated to lambasting what he perceives as severe fiscal irresponsibility and economic illiteracy among us political leaders, particularly focusing on President Donald Trump, unsustainable spending and tax cuts. He attributes the recent FIC's credit rating downgrade of the U.S. government to unchecked spending and the long-term impact of extended tax cuts, which he argues are not true cuts when financed by mounting deficits and inflation. Misunderstanding of tariffs. Schiff extensively criticizes Trump's rhetoric on tariffs, particularly the threats against Europe and warnings to Walmart not to raise prices. He explains the basic economic principle that tariffs are a tax paid by the importing country's consumers, leading to higher prices, not lower. This, he argues, exposes a profound lack of understanding of how trade and economics fundamentally work. Lack of fiscal discipline. Schiff broadly condemns the bipartisan lack of fiscal responsibility in Washington, exemplified by Trump's alleged instructions to Republicans to avoid cutting popular programs like Medicaid. He sees this as a guaranteed path to a currency and dollar collapse. Ethical concerns. He also voices strong ethical concerns over Trump's perceived use of the presidency for personal financial gain, citing examples like large deals and exclusive access offered to donors, which he views as compromising the integrity of the office. Fannie Mae and Freddie Mac. Schiff argues that these government-sponsored enterprises should be eliminated rather than privatized, as privatization would remove their implicit government guarantee, likely leading to higher mortgage rates and undermining the housing market, investment strategy, and outlook. Given his grim assessment of the U.S. economy, Schiff offers clear investment guidance. Sell America trade. He strongly advises investors to move away from what he considers overpriced U.S. dollar-denominated stocks, diversification into tangible assets and foreign equities. His core recommendation is to invest in gold, silver, and platinum as hedges against inflation and dollar depreciation. He also suggests looking into foreign equities, value stocks, and dividend-paying stocks in markets outside the U.S. for better future positioning. Warning of imminent crisis. He concludes with a dire warning of an impending currency and dollar crisis, suggesting that the Sell America trade is not just a defensive move but an offensive strategy to capitalize on the inevitable decline of the U.S. financial system as it currently stands. In essence, Peter Schiff presents a detailed and consistent argument for a bearish outlook on the U.S. economy and dollar, urging a strategic shift in investment portfolios towards hard assets and foreign markets as the Sell America sentiment gathers momentum. Might take Peter Schiff's unwavering alarm bell. Peter Schiff, known for his consistently bearish outlook on the U.S. dollar and economy, once again rings the alarm in this episode, presenting a cohesive, albeit dire, narrative. His core argument is that the U.S. is facing an escalating economic crisis driven by its own fiscal irresponsibility. He views current market dynamics, the dollar's weakening, gold's surge to record highs, and U.S. Treasuries losing their safe haven status as undeniable proof that the Sell America trade is gaining significant traction. Schiff's analysis is particularly sharp when dissecting U.S. economic policy. He strongly criticizes the prevailing political approach in Washington, arguing that deficit-funded spending and tax cuts are not stimulating growth but are instead fueling rampant inflation and systematically eroding the dollar's purchasing power. His blunt assessment of political figures, notably Donald Trump's economic understanding, highlights what he perceives as a dangerous disconnect between policy decisions and fundamental economic realities. He asserts that the public is ultimately bearing the cost of these policies through higher prices and a devalued currency. From an investment perspective, Schiff's message is clear: diversify away from dollar-denominated U.S. assets. His unwavering belief in tangible assets like gold and silver, alongside foreign equities, stems from his conviction that these offer essential protection against the impending currency and debt crisis he foresees in the U.S. His consistent warnings serve as a potent reminder for investors to critically examine macroeconomic trends and consider strategies that prioritize wealth preservation in an increasingly volatile global landscape. In summary, Peter Schiff notably warned about the impending dollar and currency crisis due to U.S. fiscal irresponsibility, U.S. Treasuries losing their safe haven status and becoming a risk asset in an inflationary environment, the negative impact of tariffs on American consumers, and the misunderstanding of basic economics by political leaders, the unsustainable nature of current government spending and debt. He drew attention to the rising strength of gold and silver as crucial hedges against inflation and currency depreciation, the need for investors to divest from U.S. stocks and explore foreign equities and tangible assets, the fundamental flaws in current U.S. economic policy, and the ethical implications of using political office for personal gain.